And this is here, like Jorge was asking about intervention, the possibility of intervention. Well, the two currencies that are now experiencing intervention are, or under the threat of intervention, are primarily the Japanese yen and the Swiss franc. So the key here is when we take a trade, we take the trade. Let me back up for a second. These interventions have been unilateral. Usually in the past, all intervention efforts were concerted. So the whole group of G7 or the central banks will agree on a policy of intervention, and they will all come into the market. Let's say if they are trying to support the dollar, all of them will be buying the dollar, and all of them are selling their subsequent currencies. So the Swiss will be buying the dollar and selling the Swiss. The yen will be buying the dollar and selling the yen. The British will be buying the pound and selling buying the dollar and selling the pound, and so on and so forth. Today, things are upside down. As you have seen in the chart for the dollar Swiss, we're scrapping at the bottom of the chart as far as the dollar Swiss. The same thing is with the dollar yen. Because now the two major economies, which are the Swiss and the Japan, they are suffering from the strength of their currency, and because of their currency is so strong, their exports are suffering, and the Japanese are trying to come out of recession, and because the strength of the Japanese yen, it is causing them a great deal of problems. And they did two efforts of intervention the last couple of weeks. But the United States, for example, England, and believe it or not, the Euro, the Eurozone would prefer weak currencies. They prefer weak dollars. They prefer weak British pound, relatively weak. They also prefer a relatively weak or not expensive euro. Why? So that they can encourage exports, and exports will stimulate demand, and demand will stimulate production, and production will stimulate the economy, and therefore the wheels will begin to turn. So the weak dollar, for example, is good, relatively good initially for getting the US economy slightly out of recession to pull it out. If the American goods and services will become inexpensive for people to buy, and they will be rushing to buy the American goods and services, thus promoting exports, and of course that will also make the US imports, everything that they buy from abroad, would be more expensive, because now they're using more dollars to buy the same amount, and that's of course what's troubling Japan and so on. So at this moment in time, the United States, Europe, and the United Kingdom are not supporting the Japanese or the Swiss efforts to intervene to support their currencies. So Japan is on its own, and Switzerland is on its own, and therefore they are timing their intervention efforts, and they are trying to be technically precise, because they're trying to make do with the small budgets, relatively small budgets they have. The Swiss National Bank spent last year, I think, close to $40 billion on its intervention, and has lost it basically. And you can see that the dollar Swiss is at the lowest level it has been. So basically, they better would have saved the $40 billion. They would have been $40 billion richer today. Okay, so we have to identify the points at which the intervention will take place. So looking at this again, this is the dollar yen. Yes, we have the threat of an intervention, but this doesn't mean we should stand aside. it means we can take the trade, but we have to identify our exit points. So this is the point where the intervention last time has begun in the dollar yen. So probably they will try the intervention at or about the same level, which is the 82.87 again. So probably we have another 50 pip push to the downside before we can begin to see some intervention. And most probably they will push the yen, or the traders will push the yen below the 82.87, because the traders now are getting more courageous. I mean, they're not fearing so much the Japanese intervention, because they know that the Japanese government now bark is worse than its bite. So they will test it, and they will go short, and they will be pushing. They want to take the lows, the 82.87 lows. They want to take it out, and they want to test the all-time low, which is the 81, which was way back in 1993, 94, I guess. I'll show you when it was. That was the all-time low back in 95, which is the Projection interrupted. Reconnecting. Oops. Saying, I'm just going to repeat just to make sure that you all have heard. The intervention has not yet been successful, and what will happen is the traders will usually push towards retesting the resilience of the Bank of Japan, and they will try to push it towards the all-time low, the lowest low that the dollar yen has ever traded, which was back in 95, which is the 81.12. So we're about 2 yen away. We are 2 yen away from the all-time low, and technically, if you look at the chart, the probabilities are, the high probability is, is that we're going to break that low. So let me show you. So if we take this chart, I'm going to put the Usdjpy. That's the monthly chart for the, I mean, if you look at this, this is the low of 95, and that is such a, that thing, guys, if it breaks, it probably going to take the yen down all the way down maybe to the 70s or 80s. So the dollar will be buying 70 yen, which is going to be, I mean, I don't know. I mean, I cannot begin to imagine what's going to be happening at that time. But if this thing breaks, there's nothing but air underneath that. That's the big hole, the big black hole right there. And probably at or around this point, the Bank of Japan is going to come up with its force, and I am assuming that they are saving their resources until that point gets tested, and from here to the 81 they will be talking the yen down, but they will not be taking any serious intervention action. But so in this case we have to go short, because the trend is we're looking at 2 more yen to the downside, and we are going to identify points on the chart where we say, oops, now the Bank of Japan is coming in, or the market is now getting jittery, so we are going to reverse. So technically this here, the 84.84, that is our new structure point. So, and okay, that's structure point number 1. We're looking for the second structure low, or the test, which is going to be the 82.87, and a break of the 82.87 is going to take us all the way down to the 81.12. So the buying point or the beginning of the short covering we're going to take from the intraday, and as you can see, I mean, this thing is just moving, making lower lows. Even we had a late day reversal on Friday. So we can just buy. You can buy. You got two buying points over here. You got two buying points above the 83.50 or the 83.69 or the 83.70. I suggest we buy on the safety to be our buying point to be the 83.69. If you see buying coming in tonight with speed, with momentum, something spikes like this. Well, let me show. If you see spikes coming in like this, and it's taking above the 83.50, so if it gets above the 83.50 like this with a big spike like that, you can buy it at the 83.50. But if it's just gradually grinding its way up towards the 83.50, do not buy it at the 83.50. You buy it above the 83.69. So the 83.69 should be our long entry to be the safe side. And if you see momentum coming in, then you can buy it at the 83.50. Okay? Our short point is going to be the 83.16. Okay, the structural point to the downside, which is the 87. Which is the 87. Let me see what the 87 is. I'm sorry, the 82.87. Okay, and the structure point to the upside is the 84.84. Okay, and if you're going to go short below the 83.16, you're going to place your stop above the market side over here, which is the 83.30. And if you're going to go long above the 83.69, you're going to place your stop below the 83.50. Okay, so this is the Japanese yen. We're going to go long above 83.69, and we're going to place our stop below 83.50. We are going to go short if it trades below 83.16, and we're going to place our stop above 83.30. So our stops in the, as far as the dollar yen, is quite short or narrow. The structure point to the long side is 84.84. So if it gets above 84.84, you want to be going long the dollar yen with force. And if it breaks below the 82.87, you want to be pressuring it to the downside, because the next target down is going to be the 81.12. Okay, that is the dollar yen.